Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now I hope many of you have been taking advantage of what's been a long weekend in many parts of the world. If you live in Hong Kong, it was just one day off on Monday, but the UAE or China don't return to work all the way till Thursday. Now, it might have been an unusually short week, but for markets, there's a lot packed into the last few days. And given we're about halfway through the week, we'll take a quick look both backwards and forwards. Now, three things have stood out to us in the week so far. In China, the official and private sector PMIs, or measures of manufacturing activity, fell sharply in April. However, what really caught Chinese equity markets' attention was the Politburo's softening tone towards regulation on Chinese tech companies. Its pledge should support the development of platform companies, and the statement that the government will step up support for the economy. For investors with 6 to 12-month horizons, we believe the statement ties well into our view that Chinese equities have room to lead Asia ex-Japan equities higher as growth-supportive policies ultimately come through against a backdrop of inexpensive valuations. Now, over in Australia, the central bank raised policy rates by 25 basis points, a little bit more than expected, sending the Australian dollar higher. Now, the Reserve Bank of Australia signaled there was more to come, with the bank's year-end forecast assuming a policy rate of 1.5 to 1.75%. Now, this, in our view, strongly supports our positive view on the Aussie dollar, where we believe rising rates and commodity prices can offer support. In the US, of course, there was greater caution. It was a big earnings disappointment and jump in the employment cost index that drove last week's sharp fall in equities. And this capped what was a pretty terrible month for the US equity market. To give you an idea of how terrible, the S&P 500 was down about 8.8% in April, which was the worst monthly return since March 2020 and the worst April since 1970. The S&P 500 is also down about 13% year to date, which, as one media report pointed out, was the worst start to a year since 1939. So it's understandable if your investment portfolio is feeling some pain. But looking ahead at the remainder of this week, the main event, of course, is arguably the Fed policy meeting, with a decision due to be released overnight in Asia. Now, 50 basis point rate hike and the start of quantitative tightening following this meeting is unlikely to surprise anyone. However, one does question how far market expectations can go. As my colleague Chong pointed out in a recent note, 75 is the new 50, with markets now starting to price in a 75 basis point rate hike for the June meeting. Our focus, of course, will be on any signals of the path forward from here. We believe this will be quite pivotal because if the Fed signals it is comfortable with the rate hike path already priced into markets, that could start to ease some of the downward pressure on risky assets. Now, in addition to the Fed, we'd also continue to keep a close watch on the Q1 earnings season. We're about halfway through, but it's interesting that outside of a couple of high visibility disappointments, overall about 81% of companies have thus far actually surprised positively. Now, where this leaves us is that while we'll be watching the Fed closely, from a US equity strategy perspective, we'd continue to favor energy, financial, and healthcare sectors. Recall that energy should benefit from high oil prices, financial should benefit from the continued rise in bond yields, and healthcare adds relatively defensive exposure at what is a significant valuation discount. So overall opportunities in US equity sectors, the Aussie dollar, and long-term in Chinese stocks. That's what we'll be watching for this week. But as always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. Wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.